This is a very important update for all United States citizens that own crypto. The IRS has been granted access to the records of Kraken users transacting over 20K in crypto. Now, you yourself, you might not use Kraken, but this video still applies to you. It applies to all United States citizens that use a crypto exchange. About a month ago, I was covering this topic. The IRS filed a John Doe summons against Kraken to get access to the user records, believing that a lot of those users are not paying their taxes. And in that video, I stated it is very likely that they will give over that information. Not because they want to, but because they have to. This is not the first time this happened. It is not the last time. In the past, Coinbase was ordered to give over the information of 13,000 users. And the crazy part is that they went as far back as 2013 to 2015. When the IRS goes after people, it's very annoying. They don't go in the moment. They'll go back 4 or 5 years later, and we look at Kraken. Right now, they are going as far back as 2016, right? Users from 2016 to 2020. And like I said, Coinbase, Kraken were not the first, and they won't be the last. Also, we saw in the past that the IRS got approval to look at the records for Circle and Poloniex customers. So we look at this information, and we think, you know what? It's not such a big deal, because if we look at Kraken, they are giving over information from users who have conducted at least 20,000 in crypto transactions on the platform. And for many of you watching, this might not be the case for whatever exchange you use. You only done 5,000 or 6,000. But the problem with taxes in general is that you need to be consistent. Meaning, if you're not filing taxes for 5 years, 6 years, and then all of a sudden, one day in crypto, you have a big payday and you cash out, the IRS is going to want to know, where did that money come from? Because a lot of you watching, even though you transact under 20,000, if you're in this space for the next 5 to 10 years, you likely will have a big payday. And like I said, they do go back in time. So you want to be consistent with your taxes. You don't want to wake up in 4 or 5 years from now with 200, 300, 400,000 in gains and go to the IRS and have them wonder, where did that money come from? Because if that is the case, they will not let you keep most of that money. And a lot of us get very upset with these types of videos, right? Why is he talking about taxes? I'm obviously not making this video to scare you guys. I'm making this video to help you guys, because it could get very messy. When you're in a country, you follow the rules. If you're living in the United States or you're a United States citizen, these are the rules. Of course, there are ways around it, but for many, it's not convenient. You can establish residency in Puerto Rico, right? True residency. You can renounce your US citizenship, which actually has a tax that comes along with it as well. Or a more convenient option is creating a crypto Roth IRA. And this is what I do personally. I created a crypto Roth IRA with I Trust Capital, who is today's video sponsor. All the profits in this account are tax-free as long as I hold until after the age 59 and a half. I'm going to repeat that again. All my crypto profits in a crypto Roth IRA are tax-free as long as I hold until after the age 59 and a half. And they have a lot of different options. There's Bitcoin, Ethereum, Cardano, Polkadot, Litecoin, Chainlink, Bitcoin Cash, Stellar, EOS, and coming soon, Uniswap and Compound. They also have gold and silver as well. But what I really like about an I Trust Capital, well, not really I Trust Capital, but any crypto Roth IRA, is that you can trade within the account tax-free. Because right now, according to US tax code, if you trade crypto for crypto, this is a taxable event. And I do have a link down below where you can get your first month free with I Trust Capital. Now, coming back to these taxes, we spoke about being consistent. And if you see yourself in the future making a lot of money in crypto and you want to remain consistent and you didn't file your taxes in the past, you'll have to file an amended tax return. Go back in time and file taxes for previous years. This could become very messy. You can do it yourself, maybe on something like TurboTax, or you can hire someone to do it, and it's going to cost a lot of money because it's not very simple. And I know this because I filed an amended tax return in the past. Like I said, I want to be consistent. You know, in 10 years, in 20 years, when I'm sitting on these massive gains, I don't want to just show up to the IRS and have them think, where did this money come from, right? I want to be consistent. Again, guys, I'm not saying these rules to scare you. I'm saying these rules to help you. And like I stated, when you live in a country, you follow the rules. Some people will travel to some of these foreign countries and they might smoke marijuana and then they go to jail for 10 years and people are complaining, you know, in my country, that's not even a fine. If you're in a country and those are the rules, you follow them. Some people go to countries and they might steal a pair of sunglasses. In the United States, you might get a little fine. Who knows what happens, right? But in some countries, you steal a pair of sunglasses, you go to jail for 10 to 15 years. So as long as you're in a country, you follow those rules. And the IRS is taking crypto taxes very seriously. This year they launched Operation Hidden Treasure. They are going after people that are not reporting taxes on their crypto income or their crypto capital gains. Really, guys, you don't want to go to jail for this, right? If you're in crypto for the next 5 to 10 years, you're likely going to make money. You want to make sure you get to keep that money and that you stay out of jail. Again, guys, I'm not saying this to scare you guys. I'm saying this to help you guys, because no one told me this when I got into crypto. This is why I had to file those amended tax returns, and it cost me a lot of money. And I don't want that to happen to you guys. I want you guys to be fully prepared and equipped going into the crypto space. Crypto taxes are often looked over. We just talk about massive gains, guys, but it's really about how much you get to keep, and hopefully that you get to keep it outside of jail. And friendly reminder, the tax deadline is coming up May 17th. So like I've been stating in this video, I will continue to do my taxes for crypto because I want to remain consistent. I personally have been using CryptoTrader.tax for the past few years. However, there are other software platforms out there, right? This is the one that I prefer. And if you want to use this platform, I do have a link down below and you can get 10% off. And what many people don't realize about these tax softwares is that there are actually 3 different ways to calculate your taxes. And depending on your specific situation, you'll be able to save money. So watch this video on how you can save money with your crypto taxes. And of course, don't forget to like this video, subscribe to the channel. Thank you for listening, and I'll see you next time.